Hey, Karl Bryan coming at you, founderfocused.com. Today I'm going to answer the question, how do you assess the strength of your business coaching client? So how do you do it? There's 5 words. Those words are predictability, sustainability, opportunities, risk, and scalability. Let me very quickly, in fact, I might just add something overarching this, and that would be the strength of their balance sheet. It's a good chance if you're watching this, if you're a business coach and not an accountant, looking at a balance sheet might not be something you do naturally. Good news is it's pretty straightforward. There's nothing that happens in a business that does not land on a balance sheet. So therefore, think of a balance sheet as a bookend. If I were to assess somebody's financials, I'd want at least 4 documents. I'd want more than that, but I would want a balance sheet as a bookend. I want an income statement, a cash flow statement, and then another balance sheet as another bookend. Okay, so so that's the strength of their balance sheet. Look, you're looking at cash, you're looking at accounts receivable, looking at inventory. That's on the asset side of the balance sheet. Accounts payable, retained earnings, of course. So these are the types of things you're looking at a balance sheet. Honestly, pretty straightforward stuff. But it's if you're new to it, might be a little bit on the intimidating side. So just get your head around it. But more to the point, if you can't read a financial statement, look, this is what you're looking for. So predictability, what were sales last year? What are sales this year? Who brought in the most sales last year? Who will bring in the most sales this year? If that person had quit, things might be a little bit less predictable, right? Sustainability. Are there new regulations coming into the industry? There's some muddy waters ahead, presumably, for the economy. Well, what would that do to the sustainability and the predictability of the business? But predictability, sustainability, opportunities, like what sort of opportunities exist? Do they have like a layered approach? Do they have like a $1,000 product, a $5,000 product, and then a $25,000 product? And then they sell lots of thousands, and then 1 in 10 of the $1,000 units converts to a $5,000 unit. And then 1 in 10 of the $5,000 unit buys the, $25,000 unit. So that would be like a layered approach to the business. And just change those numbers. Is that 10,000, 10,000, 100,000 and above? Bottom line is a layered approach. What sort of, if they only have the $1,000 unit I mentioned a minute ago, and they don't have the 5,000 or 25,000, that might be an opportunity for some serious growth. So that, I think, their profit margins, again, how can I get in there and tinker? Can I cut back costs? And then can I elevate, increase their prices? That alone, the average business has 10% margins. So if you that real simple math says that if you increase their profits or increase their prices by 5%, decrease their expenses by 5%, that would equal 10. And there are some nuances here, but you would effectively double their margins, double the profitability of that business with those 2 little tweaks. And of course, your client will say, what? Oh, I can't raise my prices because I'll lose all my clients. But that is an opportunity for the business. And then, of course, there's risk. Competitors coming in. Risk would be like in accounting, concentration risk. One staff member that's too reliant. One product that's too reliant. One marketing channel that we're too reliant on. What if one thing went wrong? It would be a domino. This is the types of things we want to look at. Maybe regulation and that sort of thing. Also, I mentioned that a minute ago. That would also come into here, muddy waters in the economy. But at the end of the day, I'm looking at risk and muddy waters. All of your clients have an increased level of risk going on right now because the economy, might go in the wrong direction. They might actually capitalize as a result of that, but more than likely, like 80% chance, they'll be on the other side of it and fighting for less scraps than there were a number of months ago. And then the other one is scalability. And very importantly, scale. People mess this up all the time. If I go to my Facebook page right now, I'm going to see somebody talking about scale. They don't even understand what it means. So there's growth and then there's scale, okay? Growth is when the business grows and expenses increase with that growth, okay? Scale is when the business grows, but expenses stay the same, relatively the same. Okay, example, Facebook. They could put 100,000 users in there today, and would it cost them an extra penny? And the answer is no, right? And again, negligible. They might have to, because of a certain threshold, they might have to employ one more person to sit on the support desk, right? But again, it's a negligible increase, not in any way correlated to the 100,000 new members. So that's what I'm looking at. If I assess a coaching client, those are 5 words: predictability, sustainability, opportunities, risk, and scalability / growth. So, is there the ability to take this thing up a serious notch? And what will the expenses look like? What are the expenses going to look like? If I own a limo service and I'm ripping you around, when I grow, no doubt you could see that that's a very difficult business to scale, debatably impossible, because you would need another limo each time you grew. You would have to continually invest in more cars, right? Pretty straightforward. If I was mowing lawns for a living, the more houses that I mow, lawns that I mow, the more lawnmowers that I'm gonna need. It's like maybe a follow-on discussion to that might be business model. Like I've talked about this in the past, where Siegfried and Roy, right? The guy wrestling alligators and in Vegas, had like #1 show in Vegas for years and years and years. One of them got eaten by a tiger. But anyways, poor bugger. So they were making like insane money, but they had to be in Vegas in order to earn it, right? So versus the Blue Man Group, who had like whatever number of guys on stage all painted in blue, and you just had to get guys with similar physiques and you could literally duplicate the act, right? Very different business model than Siegfried and Roy, who were very famous. In the Blue Man Group, you wouldn't recognize the guys if they were walking down the street. I'll let you decide if that's a good or bad idea. And I'll give you the red hot tip: it's a good idea. You want them to know your name and not know your face. I sound ridiculously ironic as I sit here and stare at you as I ride my bike in the mean streets of the canal. So that's what I got for you. Thinking about that, I'm assessing the strength of my business coaching client. I'm assessing the strength of a business. That's what I'd be doing. I'd be looking at their balance sheet, looking for a strong balance sheet. Again, if you don't know what that means, don't put your head in the sand. Okay, go and work it out. It's not that complicated. I promise you. It's not designed to trick you. So learn again, strong balance sheet, and then the 5 words: predictability, sustainability, opportunities, risk, and then scalability. So there you go. That's what I got. I hope that is helpful. I am about to go and walk. Actually, no, I'm about to ride. I got my bike back. Look at that bad boy. My mongoose is stuck in 7th gear. So I'm not sure if you've ever ridden a bike along the beach, but I'll give you the red hot tip. Unless you got legs like Arnold Schwarzenegger, I don't know that you want to be riding a bike on the beach in 7th gear. So It's sitting there. It's in for repairs, and it spends a lot of time in for repairs. So does this one. I got to tell you, it's incredibly bad for the bike to take it on the beach, but it is so much fun. It is therapeutic. As therapeutic gets for me. That's all I got for you, folks. I hope that helps. God bless. I'll see you next time. Bye-bye.